Now we'll proceed to our key forum on the latest trends you need to know about digital assets investment. We're very honored to have 4 expert panelists to share their views with us. Please join me and welcome them on stage. They are Ms. Elizabeth Wong, Director of Licensing, Head of FinTech Unit, Intermediaries of Securities and Futures Commission. Please welcome. Next, let's welcome Ms. Lucy Gasmararian, Founder and Managing Partner of Token Bay Capital. Mr. Gary Tu, Executive Director, Head of Regulatory Affairs of BC Technology Group. Mr. Patrick Walsh, Partner of Tanner DeWitt. And of course, our moderator of this panel, Mr. King Leung, Head of FinTech, Invest Hong Kong. Ladies and gentlemen, please put your hands together and welcome our guests here on stage. Thank you so much. Once again, to our online audience, you can make use of the Q&A function if you do have a question to submit. And now, when our guests are ready, I'm going to give the floor to Mr. Leung.
Thank you so much. Well, I don't know about you. I'm super excited about the announcements from Financial Secretary just now. And also for those of you who have attended or follow us at the Hong Kong FinTech Week press conference, actually hosted by Secretary Christopher Hui. Basically, the Hong Kong government has been expressing and demonstrating strong commitments to the virtual assets industry. Now, without getting into the policy details, which is something that the leaders of Hong Kong governments would unveil at the Hong Kong FinTech Week on the 31st of October, the purpose for today's panel is really about sharing a lot of the major questions and misconceptions where we're able to provide some clarifications. At the same time, we have some great speakers, experts in different areas to share with you different aspects of the virtual assets industry. Now with that, I just want to quickly introduce our esteemed speakers today. Of course, we have Elizabeth, who is representing the regulatory side of this topic. And then we have Lucy, who is a very active investor in the blockchain and also virtual asset space. Now we have Padraig, who is also a great legal advisor to many firms who are interested about this area. But last but not least, is a good friend and a great person in terms of being a leader and pioneer as the first licensed operator of virtual asset trading platform from OSL and Gary. Now, so with that, I just perhaps want to use one question from Elizabeth to kick off this sharing. Hopefully, you're able to take away something that maybe you're wondering for some time. But to start with, now obviously in the market, which we spend lots of time in engaging with the stakeholders, and there have been so much questions, so much misconception about, okay, mainland has banned crypto, and Hong Kong being part of China, does it mean that Hong Kong also is not very favorable with this asset class? So this is question number one. And question number two, there's often services among the stakeholders in all corners, both locally and internationally, is what's the stance of Hong Kong, both in terms of regulator and governments, towards allowing the retailers to access to the virtual assets investment as a new asset class? So with that, perhaps I'd like to invite Elizabeth to share her thoughts with the audience.
Thank you, King. Now, on your first question, this is a question that I know the industry is very concerned about. And you've heard it before, actually. The answer is very simple. Our Honorable Mr. Paul Chan, our Financial Secretary, mentioned it this morning. The answer is that Hong Kong has one country, two systems principle. It's a constitutional principle that forms the basic foundation to Hong Kong's financial markets. So I think when you look at Hong Kong's financial markets, you realize how it's actually working. The fact that we have so many Connect schemes, we have Stock Connect, we have ETF Connect, we have mutual recognition of funds. All these show that we are two separate systems. We are separate from the mainland. And I think another very clear example of this embodiment is the Anti-Money Laundering Ordinance, the bill that has been introduced into the Legislative Council, which sets up a licensing framework for virtual asset service providers. So the fact that we can actually introduce a bill to regulate virtual asset activities, to regulate crypto in Hong Kong, shows just how separate Hong Kong is from the mainland. Now, this bill currently is going through Legislative Council. They're scrutinizing it, and we hopefully will be able to pass it by the end of this year. And I think this just highlights how well the one country, two systems principle is working. And from the SFC's perspective, our role, being a regulator in Hong Kong, is to provide a clear regulatory framework to support this one country, two systems in action. So in terms of virtual assets, SFC is providing, already has a very comprehensive regulatory framework, and we hope that this regulatory framework can enable the industry to have an orderly and sustainable development while balancing investor protection. Now, in terms of investor protection, this brings me to the next question. So when will SFC allow retail participation? Now, maybe I could go back to give a bit of background. When we started on our journey back in 2018, the virtual asset industry was very new. There were a lot of unknown risks. There were a lot of challenges ahead. And actually, in fact, regulators around the world didn't know what to do. And many adopted a wait-and-see approach. Some adopted a more enabling approach by only implementing an anti-money laundering kind of regulation or regulating from a payments perspective. But from the SFC, we thought, and we looked at it very closely, we thought that virtual assets were here to stay. And there were a lot of issues arising from the risks that the virtual asset industry, virtual asset industry poses. So what we did was, we came in, we decided to regulate with a very comprehensive regulatory framework. And what we did was that we had to adopt a prudent approach because we were aware of the risks. So that's why we imposed the professional investor only restriction. Now, fast forward 4 years now. We've had 4 years of experience in regulating this industry, at looking at the risks that they actually pose. And what we see is that the industry has also moved on. The industry is now more compliant. They are also embracing regulation. So we think that this may be actually a good time to really think carefully about whether we will continue with this professional investor only requirement. Now, for example, we have actually, during this journey, already relaxed some of our requirements. The joint circular earlier this year already allows a limited suite of virtual asset-related derivative products to be distributed to retail investors. And the SFC currently is also actively considering and engaging with industry to see if we can set up a regime for the authorization of virtual asset ETFs, which can be offered to the retail investors. So I guess the next step for us is that right now we have the anti-money laundering ordinance, the bill, which is being scrutinized by the Legislative Council, and this bill introduces a licensing regime. But the regulatory requirements, there still needs to be regulatory requirements that need to be imposed, and the SFC is working on these requirements and look towards consulting the public later this year. So in that public consultation, we will also look at whether we can actually relax the professional investor requirement to see if we can actually enable retail investors to directly invest into virtual assets. Now, one last point that I want to end with is that if we were to relax, then obviously we would also impose corresponding investor protection measures to address the risks by allowing retail investors to invest in virtual assets.
Thank you so much, Elizabeth. In fact, I think for those of you in the field, hopefully Elizabeth just gave you the answers they've been wondering for some time. Now, I think the one thing I also want to highlight about what Elizabeth kindly shared with us just now is the word investor protection that she stressed several times just now during her sharing. So with that, I'd like to quickly transition to Gary. So you guys is the first licensed operator and arguably the most experienced in the region. Now, so with that, I just want to invite you to share your experience in sort of your study in benchmarking the virtual asset regulations across many markets around the world. And you guys have really studied it in depth. So how would you share with the audience in terms of where Hong Kong stands from a regulatory perspective?
Sure. Thank you, King, and thank you, Elizabeth. So as a licensed virtual asset operator, we've been operating for close to 2 years. The framework that we've been operating under has been around for about 3 years. So now, what's important there? It's been around as a public document for all to see, for professionals, for lawyers, for operators, and for the market. And so if we're talking about benchmarking the Hong Kong framework against other places, what we have seen is, for example, in the UK, since 2019, they have said, they have said that crypto asset platforms do need to register with the FCA. But as a mere mortal on the street, most people would probably struggle to find comprehensive public documents to understand what the registration requirements are. And similarly in Australia, Australia only now is going through their federal consultation for passing crypto asset regulation laws. In the US would be another really great example. And anyone looking to set up a crypto asset platform in the US would look to a handful of federal regulators who may have potential jurisdiction. And most of them still are currently debating the regulatory regime that they wish to put in place. And this is before we even start talking about the state levels. So quite a difficult challenge that actually Hong Kong has managed to navigate quite nicely around with a very clear public document. But what's sometimes we don't even talk about it is the underlying DNA behind under the framework is not 3 years old. It's more like 20 years old. Why is that? Because the licensing regime that the SFC is actually using under the framework is the SFO, is the Securities and Futures Ordinance. And that's been around for about 20 years. So that means, as a licensed platform in Hong Kong doing virtual assets, we share the same DNA as all the licensed intermediaries that already make up Hong Kong's very mature financial markets. It's the same legislation, same conduct requirements, same AML requirements, financial stability, client asset protection, audit requirements, you name it, it's all there. It's the same DNA. And what does sharing of DNA give us? It gives us interoperability, the ability to operate in the same manner as the existing financial markets infrastructure. And these are not just fancy words for lawyers and compliance officers to share at the next Halloween party. These actually do really have some very important real-world consequences. These things are immensely powerful within the framework because they give us interconnectivity. They give us scalability. So we can connect with investors, traditional institutional investors in the Hong Kong market. We can connect with the traditional infrastructure, and infrastructure is a very key word. And I think Chief Executive also and also the Financial Secretary mentioned very important word: infrastructure. Infrastructure is expensive. And so in order to make the expensive infrastructure workable and viable, we need to maximize interconnectivity. And that means being able to connect with banks, regulators, and ultimately the investors, the capital markets. So if we sort of sum up the 3-year journey, if you like, to come back to King's question, you know, in the 3 years that the regime's been existing, in the close to 2 years that we've been operating, what we have seen around the world is, in the meantime, the EU Parliament has just recently passed the what is commonly called the MiCA, Markets in Crypto Asset Regulation, which looks fascinatingly a lot like the approach taken by Hong Kong. Very comprehensive investor protection, financial stability, AML, comprehensive regulation. Quite a good document, very lengthy document, but 3 years after the Hong Kong framework. Australia, the federal consultation, which we also made submissions to, very similar, very comprehensive investor protection regime. Singapore, funny enough, also we've seen amendments made to the Payment Services Act, giving the MAS additional powers to offer better protection for investors in the form of client asset protection, capital requirements, insurance requirements. So what we do see is sort of this convergence between the Hong Kong approach and what we have seen over the last 3 to 4 years around the world. We see a trend moving towards the approach taken by Hong Kong, At the same time, I'm quite happy, actually I'm delighted to hear that Hong Kong's also sort of converging towards the middle in terms of how useful we make the regime by broadening out the potential investor, the investor population we can reach, by broadening out the product suite we can offer, and also broadening out through the joint circular with the Hong Kong MA, the people we can connect with. We can connect with banks, we can connect with licensed intermediaries in Hong Kong. These are immensely powerful tools. So I guess to finish, in terms of the overall trend, I think we do see a convergence, but I think we're happy to report the convergence does give a lot of support to the approach taken by the Hong Kong framework.
Thank you, Gary. Well, I guess in a nutshell, basically with the convergence, just to get the message straight, Hong Kong is no more strict than other markets. Essentially, the SFC, the colleagues there have been looking at this intensively, that we would like to put investor protection at the forefront of all this design. So as a result, this has been very consistent framework in which I think, whereas from our observations, the other markets have been looking at different ways, and sometimes they try to come across as being more friendly, but in the end, they also scale back to become so-called more stringent. So now we are converging into an area in which basically we are on par. But one thing that perhaps I'll come back in the next question to Gary is about the Hong Kong's advantage, since you're an operator, so you know this very well. Now, I think in the interest of time, I'd like to quickly change gear to Lucy. Now, you have an illustrious career in both so-called traditional finance, sorry about that, and the new finance, the modern finance. So you have also chosen to embark on this entrepreneurial journey by setting up your firm in Hong Kong, focusing in digital assets, blockchain, and so on. So can you share with the audience about what have you seen in terms of opportunities that prompted you to make this decision?
Yeah, sure. And I'm so happy to be part of this really important discussion. So when I came to set up Token Bay Capital, I saw a gap in the market because there was so much mistrust about crypto and digital assets, a lot of misinformation, but yet there was desire on the part of high net worth, family offices, and most importantly, institutions to start investing in the space. So the gap that I saw was to set up an institutional grade structure. So Token Bay Capital, it's a venture fund, it's a private equity fund, but I invest in both the equity of companies in the traditional sense, but also the digital tokens, if that is the mechanism by which these new businesses want to raise capital. So when I came to set up Token Bay Capital and I wanted to attract institutional money, I needed a regulatory framework that could accommodate my investment strategy. And going back to what Elizabeth has said and Gary, actually the SFC has been incredibly forward-thinking. I think we should recognize that they were very first early movers with issuing clear guidance on how to navigate this new nascent virtual asset technology. So the circular that specifically relates to me and my strategy was the 2018 circular, which gave all licensed portfolio managers the ability to invest up to 10% of the portfolio in virtual assets without triggering additional licensing conditions. So that was enormous for the industry and for licensed portfolio managers to start dipping their toe in to this new world of virtual assets, understanding how to manage it, how to manage risks. And as a result, it's put, in my opinion, Hong Kong ahead of many other jurisdictions when it comes to this new frontier of asset management that we're heading towards very, very fast. So these were all the elements of Hong Kong that attracted me to set up my business here, because I want to attract institutional money, because I want to operate within a regulatory framework and help to build trust in this new asset class. Aside from those really important things, talent is abundant in Hong Kong. There is so much fantastic talent. You know, we keep topping all the polls of globally the best universities for blockchain. It was the Hong Kong Polytechnic University. And that is very powerful. When I want to look towards the future, grow my business, have these very ambitious aspirations, I need access to talent. And Hong Kong, it's condensed in a very small area, and it's a very exciting workforce here that's waiting to enter the world of Web3 and digital assets. So, looking forwards, I'm also confident that this is the right choice for my business. And aside from that, Hong Kong is a global financial center. That's incredibly important. When I speak to institutions back in the UK or around the world and I say, where are you happy to deploy capital and funds? There's confidence in the system in Hong Kong. It's a top-tier global financial center. And that's really important. So when you hear regulation coming up from other jurisdictions or countries around the world, often the missing piece is, can institutions deploy large amounts of capital there? And in many cases, the answer is they cannot. So that's a really great advantage for Hong Kong. And I'm optimistic. I think all these developments in the space are coming together, and I think it really will set Hong Kong apart from many other jurisdictions. So I'm very positive and optimistic.
Thank you, Lucy. Now, for those of you who wants to know what the future is like in this field, because actually Lucy is not only well-known in Hong Kong, but also internationally. So that's why she has the pulse of where this virtual asset market is heading. So go look Lucy up on LinkedIn, and I'm sure that she'll be very kind to share her insights on this field. Now, perhaps I'd like to talk to Padre. Obviously, you have the pulse on the market too, from a different perspective. A lot of firms, like imagine if I'm someone trying to get into this space, this is confusing. There's all these new regulations. Some of them are new that maybe the regulators are not regulating yet. So it can be quite confusing that those folks would need your help to help them navigate through this somewhat chaotic field. Now, with that being said, can you share with the audience about what are the pain points that normally your clients would come to you for help? And more specifically, can you share with the audience about the kind of areas that may not be under or may not be requiring any license from SFC at the moment or any special conditions from SFC at the moment so that you can give the players a bit of sense of comfort?
Thank you, King. It's funny how lawyers and pain in the same sentence seems somehow appropriate. One of the things that's I would say in respect of this area is that when prospective clients and clients come to us, usually they come to us because they're already on a business journey. So they're already looking at a number of dimensions in respect of doing business in Hong Kong. And oftentimes our role in that process is to look at the laws and the regulation, not just the securities laws, but a range of laws that might apply. And it's one aspect of a range of services and business support that Hong Kong has got long, deep experience in. So whether it's through the good offices of InvestHK, whether it's through lawyers or tax advisors or accountants or business advisors generally, this is something that Hong Kong has done well and has done well for many, many years. So when people come to me with their projects or with a new business that they're looking to embark upon, normally what we do with them is go through a process where we analyze what that business is to create what I would describe as a statement of facts, what it is that they're trying to do and looking at it through a range of dimensions. From that, we extract what are the laws or regulations that may be relevant and that may need to be considered for that business. And then we focus on whether any of those particular aspects or issues give rise to the need for a license. Now, it could be a license from the Securities and Futures Commission. It could be a license from another regulator. The thing that often is surprising to in this conversation is, compared to many other places in the world, the trigger points for licensing, any kind of licensing and requirement, are for a start very clear. You know it when you see it. And secondly, there's a good part of the market that is not necessary for a license in order to conduct. Now, within the securities realm already, I mean, Lucy has touched on stolen my thunder. One of the core areas, which was a significant advantage in respect of Hong Kong, which is licensed fund managers who have a mandate to invest in crypto and keep their investment in crypto below a 10% de minimis threshold. There are other examples. For instance, if you are a fund manager that only invests in cryptocurrencies that are not securities, then that also is an area that is not under the remit of the Securities and Futures Commission. But other areas, for instance, in the NFT space, NFTs, either in terms of issuers or platforms, is not subject to securities regulation. I say that, I am a lawyer, so there are ifs, buts, and maybes that I'd love to add. But in general, NFTs done right should not be under the remit of a Securities and Futures Commission. Decentralized exchanges, if they are truly decentralized, they fall outside again of the remit here. And if you look at the VASP regime that is coming through, that is a regime that is intended to focus for anti-money laundering purposes primarily on centralized exchanges. So if you start piecing all of these elements together, you can see that there are a broad range of business opportunities available in virtual assets that may not necessarily require applying to the Securities and Futures Commission for a license. It is something that very much in that business journey that businesses need to take specific advice on, but nonetheless, sometimes and frequently, the message that is given is something that is more business supportive than may necessarily be expected.
So, in other words, basically based on Patrick's advice, you need to find a legal advisor like his firm, essentially to help you navigate the journey of deciding whether or not you need a license to begin with. And of course, this is something that perhaps if you talk to our colleagues at SFC, they would gladly tell you. But at the end of the day, there's only so much bandwidth in Elizabeth's team. So that's why we are reaching out to the legal professional field to get more help, so that there are more advice to help the participants in this area. Now, so quickly transition back to Elizabeth. Now, you just briefly mentioned the joint circular that your team, HMA, launched in January this year. And that's based on the industry participants like Gary and many others, is such an important piece of guidance to the industry. So obviously, what has been written, there's a factual aspect to it, but can you also share with the audience about the motivation of behind that circular, so that the industry participants know where you're coming from, and also your expectations to what the private sector would do to adopt this new guidance.
Thank you, King. Now, the joint circular is truly a very important document, and I think Gary alluded to it just now. It is a document that provides the linkage between traditional finance and the virtual asset industry. So through the circular, what we were trying to do was to provide a clear pathway for our licensed intermediaries to carry on virtual asset activities. And we hoped through this guidance that there would be orderly development in the market to link up traditional finance with the virtual asset industry. Now, from an SFC perspective, another benefit of linking up traditional finance with the virtual asset industry was that we could ensure that investor protection would be maintained, because these are our licensed intermediaries. They are clear about the SFC's expectations, they are clear about what they can and cannot do, and they are very accustomed to complying with the investor protection measures that apply to their general day-to-day business. So they know how to apply these principles and extend it to when they conduct their virtual asset activities. So from this point of view, that's the most high level and biggest importance of the joint circular. Now, the joint circular itself, on a granular level, it also provides two major breakthroughs. So the first breakthrough was that we finally allowed a limited suite of virtual asset-related products to be distributed to retail investors, which are namely virtual asset futures contracts, which are traded on a specified exchange, and also virtual asset future-based ETFs, which are approved in designated jurisdictions for offering to retail investors. So these two types of products can now actually be distributed to retail investors in Hong Kong. And as I mentioned just now, we are also looking into actively considering whether to set up a regime for authorization of virtual asset ETFs in Hong Kong. Now, the second major breakthrough of this joint circular is to allow intermediaries for the very first time to provide virtual asset-related activities through their own regulated entities. So we now allow them to provide virtual asset dealing services to their professional investor clients. Now, before this circular, we didn't expect intermediaries to conduct any virtual asset activities. So this is the second breakthrough. And the way we do it to ensure that investor protection is still maintained is that we require intermediaries to partner with an SFC licensed platform, and through an omnibus account arrangement, or through acting as an introducing agent. So we think that this joint circular also has a lot of positive impact for investors, because for the first time, they can gain exposure to virtual assets, whether through products or actually directly into the virtual asset itself. Now, most importantly, to date, we have already approved at least 2 securities brokers to conduct virtual asset dealing services, and we expect that the interest will continue, and there are other applicants in the pipeline. So we look forward to see how the industry can make very good use of this joint circular and promote the virtual asset industry through traditional finance.
I cannot tell you how important this is, because before that, we've been getting phone calls and emails from many industry participants, including the mainstream or so-called the traditional players, such as the securities firms of various sizes. And they're like, wow, we have all these new developments. We have all these questions from our clients asking whether or not we can provide these services to them legally, and they have no answers. But with this circular, that basically laid out the pathway about how they can participate. Is a very clear pathway. But of course, like anything else, you need somebody to make the first step first, right? To basically show the way. So with that, I'd like to go to Gary, because I think actually I picked this up in a press release I just read. It was between you guys and IB, I think sometime in June. And that's another watershed moment as a result of this circular. So can you share a little bit about that, and also what the other industry participants can take away from this really pioneering move?
Sure. So I guess sort of doing things for the first time, sometimes we sort of think it's sort of like bungee jumping, where you say, is it safe to do it? Or is it more like teaching your kids, your 3-year-old kid, it's safe to eat this because everyone else is eating it? I think we've sort of gone sufficiently far along the journey to actually ask the question differently now. I think we would actually be asking financial intermediaries, or we should be telling them, we're no longer asking whether it's safe to do it. We're actually saying it's actually important to understand it, because that's what financial intermediaries are expected to do, right? You're expected to understand the financial markets that you operate in. And more importantly, going back to the infrastructure point, where we should also be asking our financial intermediaries, or telling them that it's important to have the infrastructure and capabilities in place. So what do I mean? So if I'm an investing client using a licensed financial intermediary, I would be asking them, why can't I do asset allocation into this particular asset just because of technology? Why don't you have the infrastructure to financial or the technology infrastructure to support a client demand? Given the global interest in digital assets as a medium and as an asset class. If I'm a shareholder of a financial intermediary, I would be asking, what are you doing to future-proof yourself? Are you doing sufficient amount of investing in infrastructure to cater for the next generation of wealth? And also the new ways to manage wealth by this new generation. So, and then if I sort of switch seats around, and if I was a regulator, I'd be asking the banks and the licensed intermediaries, Are you exercising due care and diligence to understand the markets? Are you doing proper infrastructure investing so that you can handle this so-called new risk, which, by the way, a lot of people already handle? Just by way of example, OSL, we bank with Hong Kong, Chinese, and overseas banks. So clearly, the question of feasibility is already done. It's a question of how. So, so once again, going back to sort of from a regulatory perspective, you should be asking the intermediaries, do you have the relevant skills, systems, and compliance controls to manage this risk that already exists? So I think just to sum it up, I'm just conscious of time. Really, really, we have sort of moved really far beyond sort of asking, can we do it? Is it safe to do it? To really now, are we doing sufficient amount? Are we employing the right tools? Are we investing the right amount so that we know how to do it? That would be sort of how I would sum it up.
Well, at Invest Hong Kong, we see that our job is almost like treasure hunts. We'll be looking for the successful cases in which we're able to spread the words. And this is another example in which OSL actually partnered with one of the largest securities firms, online securities firms, Interactive Brokers, to offer virtual assets on the IB, Interactive Brokers platform. So this is a major moment in opening up access to more people. So that's why, again, stay with us. If we have more news, definitely you'll be the first to hear from us. Now the other thing I want to also pick the brains of Lucy. Another exciting area, thank God, we got Animoca Brands and Yasu and many other pioneers in the metaverse, the NFTs. I mean, this is so vibrant in Hong Kong. I mean, there's so many events and so many parties, about this metaverse and NFT space almost endlessly, right, in the past like 12 months. Now, obviously, you are the one who hold a checkbook and you invest in talents. So what have you seen in terms of the talent ecosystem in this whole Web3 metaverse space?
Well, I mean, yes, it's a very exciting time. I think the focus of the discussion we've had so far is very much where crypto meets traditional financial markets, but actually crypto or Web3, whatever you want to call it, where it meets art, culture, education, business models, advertising, there is so much opportunity for this technology in other aspects of our lives. And so innovation is just running rife. I mean, generally, if you look around the world, where we are at with Web3 is a time of hyper-experimentation, hyper-innovation. No one knows what the end journey is going to look like. That's why it's so important to cultivate an environment where ideas and innovation can flourish and try things out. I think that's very key. Obviously, the end goal is reaching to BC Group and OSL, but we need to fill that gap in between because we don't know how it's going to shape the future, but we know that the future will be shaped by this technology. So there's an incredible amount of building, experimentation, and it's capturing the imagination of the smartest, most driven people in society. So you're seeing a lot of young people, they're kind of Web3 native without you realizing it, right? They are already very comfortable with digital wallets, probably more comfortable with digital wallets than knowing how to go into a bank branch and open a bank account, right? This is the new generation of talent that thinks nothing of digital wallets and that interaction with managing your assets, your property, your online identity, all in a very sort of solo way. So it's really an exciting time. And I'd say that Hong Kong, we've talked about it multiple times already, but in terms of the talent, I mean, that's being internationally recognized. So a US publication called CoinDesk listed Hong Kong Polytechnic University as the top blockchain university in the world. That's enormous. And that ranking is based on our research. It's based on industry partnerships, where graduates get jobs. I think Hong Kong has so much potential here. What we want to make sure is that they don't go abroad. You know, they don't get educated here, understand the potential of this, and then go and get jobs in jurisdictions where they perceive it to be more welcoming. So I think, luckily enough for Hong Kong, we're very early in this Web3 journey. And so we now need to be sending the message that this is where you need to build businesses. This is for the longer term. We appreciate the importance of this new industry, where it meets finance, but also where it meets culture. And so I think Hong Kong has more an abundance of wealth. So I see so many companies based in Hong Kong. The focus of my fund is Asia Pacific, so I focus on Asia Pacific. And actually, if you take a step back and look at the macro opportunity that this hyper-efficient infrastructure provides, those that have most to gain from this transformational shift are based in Asia. The majority of the world's unbanked population are in Asia. You know, this is where this technology will have the greatest impact, in my opinion. And so being based in Asia and with Hong Kong as a key hub in the region, it attracts the talent, it attracts the startup, because Hong Kong is being positioned as something of a Web3 launchpad. And I hope that we stick to that vision, because I think it will reap great returns for Hong Kong down the line.
Well, obviously for us, we try to look at all these crossovers. And as many of you might have come across from the media and various sources, Hong Kong is positioned as not only the international financial center by the mainland, the Beijing leaders, but also the international cultural and art center for mainland. And the reason why I bring this up is because when you look at the modern finance in the form of the metaverse and NFTs, it's really about the crossing over of these two, right? It's about the finance, the money side, and also the metaverse and NFTs, the creativity side. In Hong Kong, we're so blessed we have both. At the same time, when you look at some of the market studies, Hong Kong is now, okay, since 2020, Hong Kong has surpassed London as the #2 largest art auction market in the world. So we have all these ingredients to be an enormous market for the Web3, and essentially this is really an exciting space. Now, so again, quickly transitioning to Padre again, there's another really sort of talk of town. It's about the upcoming VSP, right? The Virtual Asset Service Provider license that is supposed to be coming out, the regulation coming out in Q1 of next year. So what have you heard from the market in terms of people who might be interested about this license?
Well, maybe just to put that question into a particular context, because we're speaking about a new law and new regulation, which sounds as if we're speaking about putting conditions on how people conduct activities, which is a slight contrast to the previous question where we're speaking about areas of, say, open terrain in the market. And in fact, providing digital wallets, it's another area that generally doesn't require securities license in order to provide. So the reason I wanted to pause there is to speak about the advantages of the badge of regulation in the industry. And this is something that I think is very important if you look at a market like Hong Kong, where it is an internationally well-recognized financial services market. So if you have to, in order to conduct your business, if you have to go through a process in order to be licensed, you know that there's going to be a value to that license that will in itself attract business to your platform, to the business activities that you're conducting. Now, in terms of the new VASP license, I think there's a couple of interesting things that I've heard from clients. The first is interest, anticipation, and I can say that even looking in the audience here present today, that there are interest and anticipation from people I know that I've spoken to who are here today. So it's something that's tangible, and it's something that is real. People do want to be licensed in this particular type of activity in Hong Kong in particular. And I see that coming from businesses that may have similar licenses elsewhere and are looking at Hong Kong as an Asian piece or as a North Asia piece in respect of the businesses that they're conducting internationally. And that's something that I think is also interesting, that you see the linkages between what Hong Kong is doing to other financial centers in the world, again, because there's clarity in respect of how businesses can go forward and do things, to actually do things. The other thing that I think is surprising when I speak about the new licensing regime that's proposed for VASP services is the misconception about what is being licensed. Because it's actually it's more narrow than most of the people who have started inquiries with me actually think. It's focused on centralized token exchanges, and that is quite narrow. It doesn't cover, for instance, exchanges that are truly decentralized, and it doesn't cover other service providers around the perimeter of that. It covers centralized token exchanges. And the reason for that is, and the clue is in the ordinance that it's being brought forward in. It's not being brought forward in the Securities and Futures Ordinance. It's being brought forward in the Anti-Money Laundering Ordinance. And the touchstone, the origin of this, is through different papers and consultation happening at a global level, often through organizations like the Financial Action Task Force, which have highlighted areas of weakness in the financial services generally, that's what their role is, and have identified this as being an area that requires attention in order to make sure that we continue the combat against money laundering and terrorist financing. So this is it's another piece in an international jigsaw that happens to be in the virtual asset domain, but is in reality in a different domain. It's about prevention of money laundering. That's why it is narrow, that's why it is focused. The obvious reason for that, and the reason why it would be a centralized exchange, is because that is the onboarding point and offboarding point in respect of fiat currency. So if you're looking for gatekeepers in a prevention of money laundering context, then you can see why centralized token exchanges would be one of the areas that would come under regulation.
Thank you. I'm also conscious of time. Perhaps I will have maybe one or two more questions for our guests. Now, Elizabeth, we also got quite a lot of questions where obviously, as you know, our job is to reach out to the world, look at all the blockchain technology firms and the operators of crypto businesses and so forth. But there are also quite a sizable amounts of technology companies. Then they're asking for guidance whether or not their technology need to get a blessing from SFC. So can you clarify a little bit about what's your stance when it comes to virtual asset related technologies?
Right, thank you, King. To start off with, I would like to say that the SFC regulates on a technology neutral basis. So what this means is that we don't regulate the underlying technology. We don't regulate the service providers supporting the technology. What we regulate, and which we traditionally regulate, whether in the securities market or in the virtual asset industry, we regulate intermediation. So we regulate the focus point where an investor has access to these markets and through an intermediary. So we regulate that intermediary. And the way we regulate is that we regulate on a risk-based approach. We identified that perhaps the first thing we needed to regulate was centralized virtual asset exchanges. So that's why we stepped in. And we regulate on a same business, same risk, same rules approach. So what this means is that we look at the virtual asset industry, we look at their business models, the risks that they pose, and we look at the activities. And we see whether there's actually a corresponding activity in the securities market. So taking the centralized virtual asset exchange as an example, we looked at it and we noticed that it acted like an exchange, but then it was also a hybrid between a securities broker and automated trading venues. So the way we regulate is to impose requirements on these centralized virtual asset exchanges, which are similar to the requirements that we impose on securities brokers and automated trading venues. So that's what we mean by same business, same risk, same rules. And we adopt this across the board for all virtual asset activities. So for example, if we use the fund managers who manage virtual asset funds, we also regulate it based on this approach, by requiring them to comply with requirements that are actually based on the existing requirements that we can find in the Fund Manager Code of Conduct, which apply to all other virtual asset fund, which apply to fund managers in general. So we apply the same set of rules, but then we just tailor it a little bit in order to address the particular risks that virtual asset activities pose. So once again, I just want to reiterate that we regulate the intermediation. We regulate activities. So what we do not regulate is, for example, the virtual asset itself, unless a public offering is involved. So that's why we are actually very supportive of the industry to tokenize traditional securities, because we think that, like traditional securities, for example, bonds or funds, for example, because we think that through tokenization, you will be able to enhance efficiency, enhance transparency, and also lower costs. So this is one clear example to show that we're really actually technology neutral, and we're very supportive of the industry to use technology in their business. And as what was mentioned just now, if you have any inquiries in relation to security token offerings, feel free to contact the SFC through our FinTech contact point.
Great. Well, perhaps we have time for maybe one more question or discussion with Gary. Again, Elizabeth just briefly mentioned another super exciting development in Hong Kong in the form of STOs, the security tokens. Now, I think for a lot of people not in our field, they have no idea what we're talking about. So can you sort of, in simple terms, explain to the audience what does that mean? And why is this so important as a massive opportunity for Hong Kong?
Sure. So the simple facts out of the way first. We BC Group did BC Group, which is listed in Hong Kong. We did a private debt token issuance, and it was done as a private placement in accordance with Hong Kong law. All the boring bits. It was done via our licensed entity, OSL Digital Securities. So recap. And these actually are probably pretty straightforward and not quite interesting, but worth keeping note anyway. Private debt with a structured payout tied to Bitcoin, recorded on a permissionless public blockchain using smart contract compliance. So lots of technical words there, but from a long game perspective, why was it exciting? It's exciting because we did it in the same way as you can distribute any other security in the traditional world. And why is that important? Because traditional capital markets and financial markets in Hong Kong are already very efficient. We want to make use of the existing efficient infrastructure as much as we want and replicate it and replicate and replicate many, many times going forward. That's what makes the proof of concept interesting. So we combine that with the connectivity permitted by something like the joint circular, which allows us to also connect with other brokers, interactive brokers being one of them, and hopefully many, many more brokers in the future. Then we see the network effect. And the network effect is what makes something scalable. So if we combine sort of the proof of concept issuance that we did under the licensed framework and the interconnectivity that I've been sort of harping on about, the network effect is what gives better interconnectivity, interoperability, and this is what makes some technologies very, very valuable. It's their ability to interoperate with other things, and then overall, and then ultimately makes it scalable and profitable. So these are the important takeaways from that exercise that we did.
Well, we have the privilege to join the numerous discussions with industry players, including the OSL, the banks, real estate companies, obviously technology companies. And one thing I would like to use this as the way to sort of conclude today's sharing is that there are just so many new things happening. And for those of us who are not actively participating in this field, I can recognize this can be quite confusing. Now, so this is why I think for us, we are very blessed that we got support from the very senior leadership in Hong Kong governments, from the regulator. So that set the foundation, if you will. Now, and obviously in Hong Kong, we're also very blessed with lots of smart people who understand finance and understand how to use technology. We may not need to reinvent the wheel, but we are very good in application, how to use some technology, perhaps invented by someone else in other parts of the world, but we are very good in using them. Now, so with that as the sort of background, so really right now what we're seeing is that there's several massive opportunities in front of us. I guess for the STO, personally, I just see enormous potential. Just imagine, right, in Hong Kong, people talk about real estate, but what if you can get access to real estate in different form with a much lower threshold, right? And people talk about raising capital through like bond raising. But what if you can use tokenization to raise bonds at a much lower cost, much faster? Well, I would imagine the banks and the corporates, they should be ecstatic. They got this new channel. So really the sky is the limit in terms of what this innovation can bring to us. So with that, I just want to have a huge round of applause to our great speakers today for sharing with us these enormous insights. Now, so before we go, I just want to have a brief sharing about, we got some more exciting and drill down, deep dive discussions right outside this room. There are 3 breakout sessions. So for the session 1, it's called The Tipping Point, Balancing Innovation and Regulation for Digital Assets in room S42324. It's right outside. And this is about the balancing of regulation and the innovation. So this is exciting. The second session is about real-life case studies on digital assets and blockchain investments. So it's not just about making money, but how are those investments being applied? So this is the second session. And last but not least is another exciting bit, which is the security token opportunity to accelerate the GBA real estate market developments. Is marrying real estate with this innovation in finance, tokenization. So that's an exciting breakout session. So feel free to choose which session you want to join, show the support, and ask questions. We're here to help and disseminate information. And with that, again, thank you for your attention. And hopefully you can take away with something information that is helpful to decision making and investment. Thank you very much.